Welcome to Gold Bank Insider.
Good to be here.
We are looking at what seems to be a stabilization of the mining frontier in Mali. Now, for any UK investor with equities exposed to the Sahel or, really anyone tracking the geopolitical side of gold production, this is the one item that's demanding attention today.
It is.
We're talking specifically about the renewal of a major gold permit for Barrick Mining.
Precisely. And this all centers on the Loulo-Gounkoto complex.
Yeah.
And look, sometimes a permit renewal is just, well, administrative.
Thick in a box.
Exactly, just ticking a box. But this one feels more like a bellwether. It signals a shift, or at the very least a pause, in all that uncertainty around geopolitical risk in that part of the world.
Okay, so let's set the agenda. We'll examine the headline facts first, just to get the ground truth. Then I think we need to look at the resolution itself, the mechanics of how this dispute was settled.
Right.
And from there, we'll move straight into the winners and losers in the equity market because, well, news like this always moves capital across the sector.
Correct. We've got the data, the context, and the market reaction ready to go.
Good. Let's start at the top then with the headline. What is the core announcement here?
The central fact is that Mali's government has approved a decree. And this decree renews the permit for the Loulo gold mine.
And for how long?
It's a 10-year extension, so this isn't some short-term fix.
10 years. That provides a fair amount of runway, but we should place this in the timeline. This wasn't just a standard, smooth renewal process, was it?
No, not at all. This renewal, it actually marks the conclusion of a dispute that's been running for 2 years.
2 years?
Yes, a really substantive disagreement over profit sharing and, crucially, operational control at the complex.
So for 2 full years, there's been this big question mark just hanging over this massive asset. From a valuation perspective, that kind of uncertainty is much. It's just toxic.
It creates a discount. It has to. I mean, when you can't model your cash flows with any certainty because the very license to operate is in flux, the market will punish the equity. This announcement effectively removes that specific question mark.
Settlements like this, they rarely happen in a vacuum, do they? Usually both sides have to give some ground. So what can we tell about the terms of the settlement? What was the exchange here?
It's a classic settlement framework, really. On one side, you've got Barrick's concession. They've agreed to withdraw their arbitration case.
The one at the World Bank's dispute tribunal.
That's the one.
Okay, so that's the legal off-ramp. And let's be clear for you listening, taking a case to the World Bank tribunal is a serious escalation.
Yeah.
It really internationalizes the dispute.
It absolutely does. It puts the host nation's creditworthiness and, its entire investability on trial on a global stage. Withdrawing that signals a return to diplomacy. It's a pragmatic move to save the asset.
Right. And on the other side of the table, what was Mali's concession?
The government stated it would drop charges against Barrick and its affiliates. And perhaps even more pressingly, this includes the release of detained employees.
That's a critical human element. We did see those reports of senior staff being held. That moves things well beyond a commercial dispute and into personnel safety.
It does. And functionally, for the business, the government agreed to fully restore operational control of the complex to Barrick.
So you trade the big legal battle for operational certainty and the safety of your people?
It sounds like a hard reset button was pressed.
A very hard reset, yes.
So let's talk about the asset itself. We've said it's a major complex. Let's put some numbers on it. Why does Loulo-Gounkoto matter so much to Barrick's balance sheet?
The data really tells the story here. You just have to look at the scale of it. We are looking at an estimated gross annual production of 420,920 ounces.
Over 400,000 ounces. That's a substantial contribution to global supply.
It is. And in terms of revenue, this one asset generated nearly $900 million in 2024 alone.
Nearly $1 billion in a single year. Okay, so that is not a satellite operation. That's a core engine for the company.
Correct. It is Mali's largest gold producer. And for Barrick specifically, it's their most profitable mine. Their most profitable.
So when you have your single most profitable asset caught up in a 2-year dispute, that's a material risk. Resolving it is a material relief.
What about the longevity, though? You mentioned a 10-year renewal. Is there actually enough gold in the ground to justify that, or is this just a permit for a rapidly depleting asset?
The feasibility study suggests the longevity is definitely there. We have two categories of reserves to look at. First, you have the open pit mining reserves.
Okay.
The data there indicates about 6 years of reserves.
All right, 6 years for the open pits. That covers the near term pretty comfortably.
But then you look at the underground mining reserves.
Mm-hmm.
And that's where the real long-term value sits. The study cites 16 years of underground reserves.
16. So the 10-year permit actually covers the bulk of that prime operational life, especially that transition from open pit to the deeper underground work.
Exactly. It aligns a legal license with the geological reality. You absolutely need that 10-year horizon to justify the kind of capital expenditure that underground operations require.
Right. Let's pivot to the investor takeaway. Our audience is UK-based. They might be holding these equities or just looking at the broader sector. Why should they care so much about one permit in Mali?
It all comes down to the reduction of near-term uncertainty. Investors, well, they dislike not knowing things. When you have a major West African gold asset under a legal cloud like this was, it creates that valuation discount we mentioned.
Yeah, uncertainty discount.
Precisely. And this settlement, it quiets a lot of fears around resource nationalism.
Let's just unpack that term for a moment. Resource nationalism.
It's the trend where governments in resource-rich nations look to take a larger slice of the pie, so to speak, a larger share of the profits, or more control over the mining operations within their own borders. And we've seen this trend popping up across West Africa recently.
The fear then was that Mali might just nationalize the asset, or at least make it impossible for a foreign operator to function profitably.
That was the fear. And this deal suggests that, for now at least, a working relationship is possible. It proves a resolution can be found.
But we should be balanced here.
We must be, yes. While the permit is renewed, the backdrop, it hasn't entirely changed. We are still looking at a mining code in the region that has raised taxes. We are still looking at increased stakes in these projects.
So the risk hasn't vanished, it's just been repriced.
No, it hasn't vanished. Jurisdiction risk can reprice very, very quickly. But for the UK investor who is monitoring these situations for those discounts and risk premia, the immediate tension is released. The resolution improves cash flow visibility.
Okay.
You know the mine will operate. You know the revenues will flow. And that allows you to model the valuation with a lower risk premium than you would have just last week.
That clarity is what the market pays for. Let's move to the market reaction then. We structure this as winners and losers, but really it's about capital flows and sentiment. Let's start with the winners. Who benefits from this, apart from the obvious one, Barrick?
You see a clear theme of risk on and what you could call sentiment spillover. When a major jurisdiction like Mali appears to stabilize, it tends to lift the boat for other operators in similar regions.
So let's take Fresnillo as an example.
Fresnillo is a prime example. Now, they aren't operating the Loulo mine, obviously, but the logic here is all about perception. If West Africa's jurisdiction risk suddenly appears lower, if the market sees that these big, messy disputes can actually be solved,
Right.
that positive sentiment just spills over into the listed precious metals miners generally.
It's a confidence boost for the whole asset class.
Exactly that. It removes a headwind. You see a very similar dynamic with, say, Hochschild mining.
How does the read-through work there?
It's a risk-on signal. Hochschild operates in jurisdictions that can be complex. When investors see a positive resolution in Mali, they interpret it as a sort of de-risking event for operators in complex jurisdictions globally. They start to think, well, if they can solve it there, maybe the geopolitical risk isn't quite as acute elsewhere.
And that encourages investors to step back into these names that maybe they had shied away from.
It reduces the fear factor. Simple as that.
What about the really big players, the stability plays?
That brings us to the second theme, stability and scale. You have to look at Newmont,
The giant.
the giant. A positive headline about stability in a key gold region, it just nudges the entire sector sentiment upwards. Newmont benefits because this reduces the perceived disruption risk for global supply. I mean, if 400,000 ounces were suddenly taken offline, that creates volatility. Keeping them online suggests stability.
And investors, particularly in the large caps, they favor that stability.
They do. And Agnico Eagle fits right in here as well.
Why Agnico?
It's about improved macro sentiment towards the large cap miners. Investors, by and large, they want to see boring, profitable operations. They do not want headline shocks about revoked permits or detained staff.
Of course.
So when those shocks are removed or resolved, the appetite for large cap miners like Agnico just improves.
It makes the whole sector look a bit more investable.
Cleans up the neighborhood, so to speak.
Now, markets are often a zero-sum game, at least in the short term. If capital is flowing toward these stability plays, where is it flowing from? Let's talk about the losers, or perhaps more accurately, the companies that might see a rotation away from them.
The theme here is what I'd call a flight to de-risked scale. When the big proven projects suddenly get safer, the riskier projects start to look a bit less appealing by comparison.
So let's look at a name like Greatland Gold.
Greatland is a classic explorer developer. It's higher beta, higher potential reward, but definitely higher risk. When a major operator's project like Barrick's Loulo is de-risked, capital tends to rotate towards those larger, more certain names.
Because why take the exploration risk if the production giant is now looking safe and stable?
Exactly. The whole risk-reward calculation shifts in that moment. Money gets pulled away from the high beta explorers, and it moves toward the cash-flowing producers that just got a big green light.
And we see a similar thing with Pan-African resources.
A very similar logic, yes. If investors prefer scale and permit clarity, which is exactly what we now have in Mali, they may well leave behind some of the higher risk or smaller names. Pan-African resources might lag in relative terms simply because the spotlight has shifted to the big boys who just secured their 10-year future.
So it's about relative performance. They might not fall necessarily, but they might not catch the same bid as the others.
Correct. It's all about where that marginal dollar of new investment is going to go.
There's another layer to this, isn't there? Regarding the commodity itself, the gold versus silver angle.
Yes, this is a subtle but very real dynamic. The headline is specifically about a gold mine.
So if we look at a name like Hecla Mining,
Hecla is heavily focused on silver. A specific gold de-risking headline like this pulls attention, and it pulls capital flows toward gold exposure specifically.
the narrative becomes all about gold stability.
Yes, if I'm an investor reacting to this news, my first thought is to buy gold miners. I might stay neutral or even rotate out of my silver-focused equities like Hecla to fund that trade.
And Kerr Mining, same story.
Same relative flow argument. Kerr has major silver exposure. The gold miners are simply going to attract more attention than the silver names when the entire news cycle is dominated by a major gold-permitting headline. The volume, the eyeballs, it all goes to the gold thesis.
So the silver names get left on the sidelines for this particular news cycle.
In the immediate term, they can become a source of funds rather than a destination for funds.
It's quite something to see how one permit renewal in Mali can ripple through to affect silver miners in the Americas or explorers in Australia. It really highlights the interconnected nature of these capital flows.
It does. It is never just about the local news. It's about how that news alters the global risk map for investors everywhere.
Okay. So we have the permit, we have the settlement terms, we have the winners and the losers. As we start to wrap this up, let's try and synthesize it for the listener. What's the final take?
The synthesis is this. The resolution in Mali provides a momentary and probably much needed sigh of relief for large-cap gold exposure.
Right.
That relief potentially comes at the expense of the explorers and the silver players who just lose that relative appeal in the short run.
But the story isn't over.
No, not at all. While the permit is safe for now, we must remember the context we started with. The higher tax environment in the region remains a factor. The broader trend of state intervention remains a factor. This is a battle won, but the overall landscape for valuation still requires very careful navigation.
A clear view of the board. That's what we aim for. Thank you for walking us through the details on this.
My pleasure.
And thank you for listening to Gold Bank Insider. We'll catch you on the next update.